Hi, and welcome to the Stockscores Market Minutes for September 17th, 2012. In this week's video, I'm going to look at how information shows up in trading activity, the sort of information that triggers the move in hot stocks. A reminder to subscribe to my YouTube channel. That'll give you alerts as soon as new videos are uploaded, and also to subscribe to my free weekly newsletter if you've not done so already. The address is there on screen, stockscores.com/newsletters.asp. All right, let's get into the meat of the presentation. We're going to talk about how positive new information shows up in trading performance. Of course, positive new information that highlights a significant change in the fundamental value of a company can motivate a strong price trend. The market moves on what it expects to happen in the future, not on what has happened in the past. There's not a lot of good in knowing that company A is being bought by company B at a premium, because once that information is out in the public realm, it will be priced in already. We need to know that information before it becomes public, and you will find that in every stock that trades abnormally, there is some sort of action going on. We're going to show you how to find that. So in order to find the next hot stock, we have to find the stocks that have significant fundamental change, and if you wait for the news, you are too late. However, as I said, within every stock, there's almost always someone that knows more than the rest of us. And these people with better information will leave a trail to follow in the market in how they trade that stock. They will create abnormal activity that tells you that something is going on. It is best if the abnormal action surprises the market, if it comes out of some sort of quiet trading pattern. Here's a chart that really shows what I mean when I say once the information is out, it is of no good to us. This is a stock that announced today that they are being bought by another. The buying company is willing to pay $19.50 a share. On Friday, the stock was at $13.50. Today, it's at $19.50. There was really not a lot of action in the middle because the stock jumped up on the news. And this kind of thing is of no good to us, because even though the news is very positive for someone that owns the stock, if we don't own the stock already, we don't really get to benefit from that big jump. There are, however, situations where the market tends to price in new information before it is widely known. Here's an example of a stock that I've been trading recently. This is Office Depot. And you can see that it started to behave abnormally early in September. Now, at the time, I found this stock with the method I'm going to show you in a moment, but I really didn't know why Office Depot was jumping up in price. All I knew is that something was going on, and it was evidenced by the abnormal price action and abnormal volume. Well, since that time, the stock has continued to move higher because there are some rumors that this company may be bought out. There's been a large institutional investor accumulating shares, and there's just this sense in the office supply sector that there's going to be some mergers and acquisition activity. And so this stock has done very well. But we know that today. We didn't know that when the stock was at $1.50 or $1.60 or $1.70. At that time, the stock was just trading abnormally because somebody knew. It's just that we didn't know because that information wasn't in the public realm. Now, it shows up a little bit more clearly when we look at an intraday chart going back to early September. And at my black arrows there, you can see that abnormal activity, that spike up in volume, that spike in price action. That tells us that something is going on. And we don't have to know what's going on. We just have to trust that the market is not making a mistake. Now, we can find abnormal activity with the abnormal activity filters in the Stockscores Market Scan. I'm going to show you those now. So we're here in the Market Scan, and you can see that we have all these filters to choose from, and we'll use many of these things, but the ones I really want to highlight today are the abnormal activity under price, and we can select abnormal day up, abnormal day down, and also the abnormal volume filter right there. So for example, we can say, show me all the stocks that had an abnormal day up, that trade on all exchanges, that traded, let's just say, at least 2,000 times today, and broke through 5-day resistance. Now, we could add in a lot of other filters, but this is one way to find those kind of stocks like Office Depot that were trading abnormally without really knowing what's causing them to trade abnormally. Now, this particular scan that we just built quickly found 17 stocks. I like to run the scan throughout the trading day to find the stocks that are moving. I then going to view those charts in the gallery viewer and just sort of cycle through the charts looking for signs of abnormal action out of low volatility, boring trading. So here you can see an example of a stock that's been very boring over the last little while, trading around $1, and then today spike up in volume, a little bit of price action there. That's a stock that I bought today without knowing anything about what the company is doing. Here's another one where you see a stock pretty boring, and then today jump up in volume, abnormal price action. That tells us that something is going on. Here's another one, Biosante Pharmaceuticals. Don't know anything about the company, but someone's excited about it because they pushed the stock up 22% today with abnormal volume. So if you look for abnormal activity in terms of price and volume using the Stockscores Market Scan, you can find the stocks that are making moves on new fundamental information. The key thing is to not only look for the abnormal activity, but make sure that it is out of quiet, boring trading. We don't want stocks that have been going up for a few days. For example, this stock really started its abnormal activity on Friday, or the day previous to this video. You can see on Friday the volume was higher and the price action was higher, and today was a follow through from that. If you had bought Royale Energy on Friday at under $3, well, today you're up 28% simply by following that abnormal activity. All right, let's get down to the weekly analysis of the charts. We can go back into the presentation here. The S&P 500 obviously benefited greatly from the decision by the U.S. Federal Reserve last week to buy mortgage-backed securities as well as other bonds to try to keep interest rates down and stimulate the economy. That was a big step, for it allowed the market to make that continuation of the breakthrough resistance that I've drawn in that shorter red line. Now you can see that we have optimism. The bottoms are rising from left to right. That's the green line. We have recently broken through resistance, which means we should now trend up towards the next level of resistance, the longer red line that I have drawn. In the short term, I wouldn't be surprised to see a little bit of profit taking. You know, this is a weekly chart, and you can see that price has moved away from the trend line, the green line there, and that just means investors got a little bit excited about what's been going on with the world's central banks. So don't be surprised if the market pulls back or goes sideways in the short term. Wouldn't be a bad thing, wouldn't be a surprise, although it certainly isn't guaranteed this market could continue higher. The Toronto Stock Exchange recently broke its downward trend line and then had nice follow through in the strength last week because of, again, the decision by the Fed in the US to buy back mortgage-backed securities and that sort of thing. That hurts the US dollar, helps the Canadian dollar, and of course helps commodity prices, which the Canadian market is heavily linked to. So this is a solid looking chart, starting to turn around, but again, a little bit ahead of itself, probably gone up a little too fast in the last couple of weeks, now hitting some resistance at 18 on this ETF. So I think it'll probably get stuck here for a week or two. The Russell 2000 has started to play catch up to the larger cap stocks, but it is now at resistance. And so while the buyers are in control, again, I think there's a good chance we're going to see it stall here for a little while. Longer term, I like how this chart looks. Just short term, expect some profit taking. The TLT is an important chart because it really shows how people are putting their money into hiding. You know, we see people buy treasuries not because they're getting a great return on their money, but simply because it's a place to hide capital. Well, the trend on the TLT was broken last week, and that's a good sign for the market because that means money is coming out of the safety of 20-year bonds and probably looking for a place to land in the stock market. US dollar also falling off, but has fallen away from its downward trend line. It deserves to bounce back in the short term. I do think that the US dollar has broken its optimism. That upward sloping green line has been broken, and that tells me this market is likely to pull back in the next little while. Gold has broken its downward trend line. It did that about 4 weeks ago. We've talked about that in this video, and that was a sign that the gold market was going to continue back higher. It has done that. I think there's probably some profit taking due on gold, but I like it longer term simply because it has started to show optimism again. Oil has been stuck in this long-term trading range. It's had a pretty good run over the last couple of months, maybe even 3 or 4 months. But it's now looking a little bit toppy as it comes into the resistance. So don't be surprised if oil stalls here and starts to move back down again after a pretty good run higher. So overall then, I am optimistic on stocks, both US and Canadian, optimistic on gold, and neutral on oil. Last week brought the positive signals for equity markets and commodities. The short-term strength has overextended the market, making it likely we will see profit taking in the short term. The longer-term outlook is positive for stocks and commodities. Just again, look for that short-term profit taking after a strong run. Well, that has been the Stockscores Market Minutes for September 17th, 2012. Have a great week in the market and trade well.